Hey, good morning. Let's go over today's trade plan. So in the overnight session, the market has been balancing within a range, and the buyers have continued to hold ES above 2500, which tells us that the buy side continues to be in control. Our short-term bias heading into the day is going to be neutral because the market has been balancing within a range pretty much the entire week. On the upside, we have resistance at 2504.75 to 2507.25, and we will need to see broad market strength and some sustained upside momentum in order for the S&P to put in any kind of sustainable breakout. On the downside, we have initial support at 93.5 to 96, and that's still an area where responsive buyers can be active, but we just have to be mindful of the fact that the zone was tested yesterday. So now if we head down there again, it'll be a second test of the zone, and we have to exercise a little bit more caution. The first test of a breakout area is going to have the highest odds of producing a response, and we saw that take place yesterday. So at this point, if the buyers are really going to maintain control and push the S&P to fresh all-time highs, ideally you want to see the S&P holding above 2500. In the event that we get a successful upside breakout, there is no hard resistance beyond 2507.25, which marks yesterday's high as well as the all-time high, but based on the recent ranges, we would have potential to go up to 2512 to 2514, and then the 1975 to 2175 area marks a range extreme. So it is lower probability that we'll get all the way up to 1975 to 2175, but the important thing to keep in mind is that above 7.25 there is no hard resistance, so it's just going to depend on how much volume and volatility we're seeing on the day time frame. If we're heading up on higher volume, then we could get a slightly wider range, but if we're going up on low momentum and low volume, then 2512 to 14 could be it. In the event that we get a downside move, there could be a pickup in volume and volatility. So 93.5 to 96 is still a spot where buyers can be active, but because now it's going to be a second test of that area, the selling does not necessarily have to stop at 93.5 to 96. So that's something that we will have to assess in real time. Below initial support, responsive buyers can still be active at 87 to 89, especially if the market is exhausted into it. So unless we're seeing trend down type conditions with the other markets breaking down in a much more meaningful way, buyers can still defend at pretty much every support zone on the way down. So again, heading into the open, our short-term bias is neutral. We have to be flexible and nimble with our intraday bias. The intermediate and bigger picture bias continues to be bullish, so we know that the market can still break out to new highs, but we also have to keep in mind that in order for an upside breakout to take place, we do have to see broad market strength and sustained upside momentum. Now, since the market closed at 05.25, the advanced decline line does not have to be extremely positive in order for a breakout to take place. It just has to be in positive territory and trending higher. And more importantly, the NYC tick should be holding above zero and printing around +4 to 600. So those are the main ideas heading into the open. Let's see if the buy side can maintain control and take out the 04.75 to 07.25, and we'll take it from there.